Nancy Havens-Hasty, president of Havens Advisors, a hedge fund focused on mergers, distress, and high-yield stocks, and event-driven, really, joins us from New York. Good to have you with us, Nancy. You must be fist-pumping these days. What do you think about this HP bid for 3 par? It was a big premium to what Dell was offering, but look at the market surge.
Yes, well, we're very, very happy. We were owners of the stock before last night. We didn't have a large position, but you didn't need a large position when the bid is increased by 33%. Basically, this is a small deal. It's $1 billion, $1.5 billion, depending on who's buying it. HP is 60 times as large as 3 par, and even Dell is 20 times as large. So the dilution that's going to be suffered by either company is relatively modest, and it almost doesn't matter what they pay. Both companies need storage technology for the future, and 3 par has excellent technology for the future, and they're more interested in the patents.
It doesn't matter what they pay. Nancy, let's talk about the big premium, because that shocked me. 33% premium, and right now we have the shares already trading above that offer price from HP at $26 after that 45% surge on the stock market. So what does that mean? Are we going to see a counter bid coming from Dell?
We do expect that Dell will come back. Now, we don't know, and it's perfectly possible that they won't. They don't have as much wherewithal as HP, but they need this deal more than HP. So I think the reason I say it doesn't really matter, especially to HP, is because even at a 33% premium, there is no material dilution, according to HP on their conference call this morning, that's going to be suffered to 2011 earnings. And that's really because this company is so much smaller than Hewlett-Packard or than even Dell. It's 5% the size of Dell.
Yeah, it is tiny in comparison. So what does that mean, Nancy? Are you going to add to your 3 par positions? What do you think the final offer price will be to close this deal?
Well, it's hard to know, but if Dell does come back, I can't imagine them expecting to win at the same price. I would anticipate that they would have to, in order to keep HP away, bid at least a price of something like 28. I don't think they'd bid 26. And ultimately, if they decide to come back, the whole bidding war could go much higher than 28.
Okay, well, talk to me about the potash bidding war then, Nancy. I mean, look at the share price now trading at $158. Where do you think we're going to see this deal close? And do you think potash will be able to fend off BHP?
Well, one of the important things about potash is that it is not trading anywhere near its high. It reached a high in 2008 of almost $240 a share, just shy of $240 a share. So this price doesn't look all that interesting to them from a historic perspective. And the other, at $130 a share, it's not interesting at all, especially given the prospects for fertilizer. Everybody is predicting fertilizer will do wonderfully over the next several years, especially this year, given what's going on with the flooding in Asia and the droughts in Russia. And the 2 other fertilizers, phosphate and nitrogen, both of those prices have increased a lot this year, but potash, interestingly, has not. So that's why there's a particular belief that potash will gain in price this year.
Okay, Nancy, quickly, I'm going to give you 20 seconds here. Potash, still a buy in your view then? And who's going to buy it up? Sinochem Valley's been named?
I don't know who's going to be the eventual winner. I think BHP has a big leg up, but I think there could well be other bidders because it's a very oligopolistic market. Sorry.
All right, Nancy, thank you for that. Nice talking to you.